So imagine this. You pay taxes on every dollar you make, and they pay nothing. You bust your ass for 40 hours a week, and they borrow millions without ever touching a paycheck. This isn't an accident, my rebels. This is the system working exactly the way it was designed for them. Today I'm pulling back the curtain on how billionaires avoid taxes legally, and how you can start playing smarter too. Let's get into it. Now be real with me for a second. You guys, how is it that someone like Elon Musk can add $50 billion to his net worth in 1 year, and somehow owe less taxes than your DoorDash driver who made $35,000 and still had to beg TurboTax not to bully them? And let me tell you, it's not because they have secret Swiss bank accounts or underground money layers like some Bond villain. No, it's because they understand something most people don't, my love. The tax code isn't really about paying your fair share. It's about playing a different game entirely, y'all. The first big truth bomb you need to know is this. Rich people don't make income the way regular folks do. You get paid, you pay taxes, you cry on April 15th, but them? They buy assets, stocks, companies, real estate, crypto, and those assets grow in value while they sleep, y'all. And the best part? You don't get taxed on growth until you sell it. That's the power of unrealized gains. Oh yes. It's like your stock portfolio is gaining weight, but you don't have to admit it until you step on a scale, which you conveniently never do. Figures. Meanwhile, your boss pays you $80,000, and the IRS is right there at the door knocking, asking for their cut before you even cash your check, like total losers. But wait, rebels, how do billionaires actually live if they don't earn cash? That brings us to step 2. Before we move on, rebels, now would be an amazing time to like the video. Billionaires borrow against their assets like it's Black Friday every day. Imagine you own $500 million worth of Tesla stock, right? Instead of selling your stock and triggering massive capital gains taxes, you just stroll into a bank and ask for a $50 million loan secured by your stock. Crazy, huh? And get this, banks are more than happy to lend you that money. Because if you don't pay back the loan, they simply sell your stock to cover it. It's super low risk for them. And because loans aren't considered income under the tax code, you owe absolutely $0 in income taxes. You get millions in pure cash. You buy mansions, private jets, and Italian leather shoes, and you still pay nothing to Uncle Sam. Meanwhile, poor old Chad from accounting has to report $500 he made selling his old couch on Facebook Marketplace. But what happens when you combine depreciation with other smart money moves like real estate loopholes? It gets even wilder, y'all. Now on to the feel-good Instagram photos you see these billionaires posting, charity work. You might think they're giving out of the goodness of their hearts, and don't get me wrong. Sometimes they are, y'all. But charity is also one of the most brilliant tax hacks. Instead of donating cash, they donate appreciated assets like stocks. For example, if Jeff Bezos donates $100 million in Amazon stock instead of cash, he gets a full tax deduction for the current value of the stock. He also skips out on the capital gains taxes he would have had to pay if he sold those stocks himself. Double win. It gets even better. Billionaires set up private family foundations. They donate their assets to the foundation, but because they often sit on the boards of these foundations, they control where the money goes. They can employ family members at high salaries. They can even invest the foundation's money into ventures that personally benefit them, all while claiming massive tax deductions. Is it possible for regular people to use similar strategies? Yes, and I'll show you a few ways in just a minute. Before we get there, though, let's break the flow for a second with a thought experiment I call the Jeff Bezos ramen test. Imagine if Jeff Bezos walked into a ramen shop and bought a $10 bowl of ramen. For him, that transaction would be like you or me dropping a single grain of rice on the ground. He wouldn't even notice. Meanwhile, most of us swipe our debit cards and have to pray it doesn't decline while the cashier gives us that side eye. The difference isn't just that he makes more money, it's that he leverages the system while most of us are stuck hoping for good vibes. But the good news is you can start playing smarter today, even if you're still on a budget. But how do billionaires make sure they don't get crushed by debt? There's a system to that too, and we'll get to it in a moment. Now let's talk about depreciation. This might be one of the biggest legal scams in plain sight. When billionaires buy things like commercial real estate, jets, or equipment, they get to depreciate those assets. Depreciation means they tell the IRS, hey, this thing loses value over time, so I deserve a tax break. And the IRS agrees. Here's the insane part. In real life, a lot of these assets actually appreciate. A luxury skyscraper in Manhattan doesn't lose value, it gets more valuable. But on paper, they're claiming massive tax deductions for losing money. It's like buying a pizza every day, claiming it loses value because you eat it, and then getting a tax refund because you're a responsible pizza asset manager. Let's be honest. You're probably thinking, okay, cool, but I'm not sitting on $400 million in Tesla stock. What can I actually do? Here's where the real opportunity starts. First, the Roth IRA, otherwise known as the peasant's tax hack. With a Roth IRA, you pay taxes on your money now when you're broke and adorable. Then it grows tax-free forever. No capital gains taxes. No income tax on withdrawals and retirement. Rich people are actually banned from using Roth IRAs once they make too much money. It's one of the few perks that favors regular people. Start early, max it out every year, and by the time you hit 50, you'll have tax-free money like a mini Warren Buffett. Next, start a small business or side hustle. When you run even a tiny business, whether it's selling crochet hats on Etsy, flipping sneakers on eBay, or doing freelance graphic design, you can start writing off expenses. Bought a new laptop? Business expense. Pay for Wi-Fi? Business expense. Coffee shop meetings where you brainstorm for 10 minutes and gossip for 2 hours? Maybe still a business expense. The point is, entrepreneurs get access to tax breaks that employees simply do not. And third, prioritize investing in assets over buying liabilities. Every dollar you spend on things that lose value, like designer shoes you'll wear twice and forget, could have been invested into something that grows. Stocks, real estate, your own education. The tax code punishes consumers, but rewards investors. Be the investor. Let's review quickly so it locks in. First, billionaires own assets, not wages. They don't get traditional paychecks. They own stuff that grows in value. Second, they borrow against their assets instead of selling them, so they avoid triggering taxable events. Third, they use depreciation to report losses that don't actually exist in real life. Fourth, they weaponize charities and foundations to control wealth while getting tax benefits. Fifth, they rinse, repeat, and build even more power year after year. And here's the kicker. Most of these strategies aren't even hidden. They're sitting right there in the tax code. But nobody teaches you about them in school because it's more convenient to keep you focused on earning wages and paying high taxes while they build generational wealth quietly behind the scenes. The uncomfortable truth is this: billionaires didn't just win the game. They designed it. But now you're holding the blueprint too. If you start thinking in terms of assets, if you start structuring your money to work for you instead of against you, You can start bending the system in your favor. And if you're tired of grinding harder every year just to hand half your paycheck over to taxes, now's your time to rebel. Smartly, legally, strategically. Smash that like button if you learned something new today. Hit subscribe so we can keep building your financial rebellion together. And drop a comment below. Which billionaire move shocked you the most? Which one are you going to start applying to your own life? Because at the end of the day, it's not about how much you make. It's about how much you keep. That's real power and real rebellion.